This one candle pattern is a complete day trading strategy. It finds 3 to 4 trades a day, replacing all your indicators. I'll show you the system and how to automate it with AI. The pattern is an outside candle that engulfs 3 others. That's it. When you see this, it's not random noise. The institutional money just entered the market. Think about the physics of this. To blow past 3 candles in a single bar requires overwhelming force. You can't create that kind of move. Only institutional money can. Banks, hedge funds, the players who actually move price. They just show their hand. This is why it replaces your indicators. Most traders use indicators to see the effect of a move. This pattern shows you the cause. You are no longer chasing price. You are moving with the force that creates it. Here's the exact pattern I look for every single day. 3 small candles, usually quiet, nothing special happening. Then the 4th candle appears, and it's completely different. The high of this candle is above all 3 previous highs. The low is below all 3 previous lows. It literally wraps around them. But here's the crucial part that you probably miss, the close position. For a bullish signal, the outside candle must close in the top 25% of its range. For a bearish signal, it must close in the bottom 25%. If that sounds complicated, here's all you need to know. Draw the candle in your mind. Is the close near the top? Buy. Near the bottom? Sell. That's it. The close position tells you who won the battle. A close in the top 25% means buyers didn't just show up. They dominated. A close in the bottom 25% means sellers came in hard and stayed in control. Look at this euro-dollar chart with me. 3 small candles, then this massive green candle appears. High above all 3 previous highs, low below all 3 previous lows, close in the top 10% of the range. 50 pip move followed within 2 hours. Here's Apple stock, same exact pattern. Bitcoin, 3 quiet candles. Outside candle appears. 2% rally within hours. The pattern is universal. Forex, stocks, crypto. Most traders spend years trying to find one reliable setup. You found one in under 5 minutes. Now, this pattern works, but trade it in the wrong direction and you'll lose even when the pattern is perfect. Let me show you the one filter that cuts your losing trades in half. One rule will transform this strategy from average to exceptional. You know that saying, the trend is your friend. It's repeated so often because ignoring it is the fastest way to blow up your account. Here's the concept. If price is above the 50 EMA, only take bullish patterns. If price is below the 50 EMA, only take bearish patterns. But here's what you probably do wrong. You see a perfect bearish outside candle and think this is the reversal. You short it. Then price keeps rallying because the trend is up. You just fought institutional money. I used to do this exact thing. I'd see a beautiful bearish pattern and couldn't resist. The setup looked perfect on the 5-minute chart, but the 30-minute trend was screaming uptrend. I lost a lot of money before I learned this lesson. Here's what I do instead now. I check the 30-minute chart first before I even look for patterns. Is price above or below the 50 EMA? That's my bias for the entire day. I ignore every pattern that goes against it. No exceptions. This discipline is what separates you from the traders who donate their accounts. In an uptrend, every dip gets bought by someone. When you see a bullish outside candle in an uptrend, you're joining the buyers at a point where they just showed serious strength. You're riding the wave, not fighting it. Let me show you this on today's market. Price is above the 50 EMA, and it's sloping up. We have an uptrend. I'm only looking for bullish outside candles. Any bearish patterns get ignored completely, even if they look perfect. You might see the most beautiful bearish outside candle today, but if the trend is up, you walk away. No revenge trading, no exceptions. This sounds stupidly simple, and it is. That's why it works. Okay, you now have a pattern and a filter. That's more edge than most retail traders develop in years. But there's one more piece. The best traders don't just look for this pattern anywhere. They wait for specific locations where probability doubles. Location is everything with this pattern. You wouldn't build a house in a swamp, and you shouldn't take trades in bad locations. The same outside candle at support versus in the middle of nowhere has completely different odds of success. For bullish outside candles, you want to see them at support levels. What counts as support? Previous lows that held. Round numbers like $50 or $100. The 50 moving average. Yesterday's low. These are your hunting grounds. For bearish outside candles, flip everything. Previous highs that rejected price. Round numbers from above. Moving averages in downtrends. Yesterday's high. But here's what really separates the A-plus setups from the average ones. The pullback before the pattern. You want to see several candles pulling back into your level before the outside candle appears. This pullback shows temporary weakness that's about to reverse. Check this out. Price is in an uptrend. Pulls back to yesterday's high. 3 small red candles form right at that level. Then a massive bullish outside candle appears. That's an A-plus setup. When price pulls back to it and forms this pattern, institutions are buying. Moving averages act as dynamic support and resistance. The 50 EMA on your 30-minute chart. Price often respects these like walls. When an outside candle forms right at the 50 EMA in an uptrend, probability increases dramatically. Here's what you skip. Outside candles in the middle of nowhere. No clear level nearby, no pullback, just a random pattern in empty space. These fail more often than they succeed. You're not trying to catch every move. You're trying to catch the high probability moves. Now, you now know what to look for, where to look for it, and when it has the highest probability. That's a complete edge. But now I'm going to show you something that'll blow your mind. How to automate this entire process with AI in under 5 minutes. Now I don't know about you, but I don't want to spend hours staring at charts looking for 4 candles. Let me show you how I built an indicator that does this for me instantly. This is where everything changes. Instead of manually scanning every chart, we're going to build an indicator that finds these patterns automatically, and we're going to use AI to write the code for us. No coding knowledge needed. I'll show you exactly what to do. Open Claude or ChatGPT. Here's exactly what I type. Now watch what happens. The AI starts writing code immediately. It understands exactly what we want and creates a complete Pine script indicator. This would have taken days or weeks to code it. Claude just did it in 30 seconds. Now I copy this entire code. Don't worry about understanding it. You don't need to. That's the beauty of AI. It does the complex work for you. So switch to TradingView. Open any chart. Click on Pine Editor at the bottom of the screen. Click Create New Indicator. Delete the default code that appears. Now paste the AI-generated code. Click Save and name it Outside Candle Finder or whatever you want. Then click Add to Chart. Look at that. Arrows are now appearing wherever our pattern shows up. Green arrows for bullish outside candles. Red arrows for bearish ones. Every single pattern is automatically identified. You never have to manually look for them again. While other traders are still drawing lines, you have a robot finding setups for you. This is the future of trading, and you just built it in 5 minutes. Now let me show you the complete execution system. This system has 2 entry methods. Choose one based on your style. Method 1 is the conservative entry. After your outside candle closes, you place a buy stop order just above its high for bullish trades or a sell stop below its low for bearish trades. You only enter if price actually breaks beyond the outside candle. This confirms momentum is continuing. Method 2 is the aggressive entry. The second that outside candle closes, you enter at market. No waiting, no confirmation, just immediate execution. This gets you better prices when the pattern works, but more losses when it doesn't. Which should you use? If you are new to this method, start conservative. Take the confirmation. Get comfortable with the pattern. Once you've taken 50 trades and understand the pattern's personality, then consider the aggressive approach. Your stop loss is non-negotiable. It goes beyond the opposite extreme of the outside candle. Your profit target starts at 2R minimum. If you're risking $100, you're targeting 200. Risk 1 to make 2. Every time, no exceptions. You now have complete entry and exit rules. No guessing, no hoping, just systematic execution. This is what professional trading looks like. Look at this gold chart with me. First thing I check, where's price compared to the 50 MA? Above it, sloping up. I'm only hunting longs today. Now watch this section here. We had a pullback this morning, and look where it pulled back to. Yesterday's high, acting as support. Perfect location for our pattern. Now look at the candles. 3 small red candles pulling back, but staying above that support. Classic consolidation before a move. Then this green candle appears. That's a textbook bullish outside candle. Everything aligned. Uptrend. Support level. Perfect pattern. Entry on the break of the high. Stop loss goes below the outside candle's low. That's also below the 50 moving average. Target at 2R. This happens every single day. You execute the system. You manage the trade. Rinse and repeat. This is what I look for every single morning. No complexity, no overthinking, just pattern recognition and proper execution. You now have the complete day trading system, a simple pattern, a professional rule set, and an automated system to execute it. You've moved from being a confused trader to a system trader. And if you're ready to fit this into a full A to Z trading system, that's what our academy is for. Link is in the description.